Hello, this is Market Ready. I want to talk today about a trade I had in Bitcoin where I made $4,000 by risking $1,000 or 4 hours. As you can see, here my daily setup. So I like to observe price action according to 3 time frames. The top one here is the daily time frame. The second here below is the H1 or hourly time frame, and the one below is the uh, 5 minute time frame. Or in this case 15, I can go down to 5 minutes. So it's up to you to choose 5 or 15 for your entry. So mainly I use the daily and the hourly time frame for the bias and directional trend, and the lower time frame 5, 15, and even 30 minutes for my precision entry. And in this case, I will describe the process I use. So we start with the daily time frame. So as you can see, so this is the daily time frame until Friday. So what I want to put on my daily time frame is the previous week high and low, the previous month high and low, FVGs, and I observe candlestick patterns as well as the order blocks. I like the daily order blocks. So if you can see, this is Thursday. We think it's wrong about the previous week lows. Yeah, so we go one day after. You can see that. Yeah, this is the. So as you can see, on this is previous week low. This is previous week high. So we started the week bullish. This is Saturday, Sunday. We use Saturday and Sunday because this is crypto. So in crypto we trade Saturday and Sunday. And on Monday we reach this. This is a break. This is an inversion. So this is the bullish daily FVG. This is the inversion. This is inverted FVG. So we reach this inversion. As you can see, on Tuesday the price rise to this level, but closed below it. So we could not cross the inversion and cancel it. So this inversion, this daily inversion. So as you can see, we try to be precise. This is daily FVG. This is daily FVG. And price rejected from this level. Then this is the inversion. This all it's daily. Sorry, it's not H4. Daily EFVG inversion. So rejected on this level the first time, we rejected, then we inverted. Now we came back, we inverted, but we couldn't get lower. Why? As you can see, we have very strong daily order block. So this is the order block. Price rise from this level, came back again, and rise again. So this is extremely powerful daily order block and daily levels, as well as previous the high and lows and FVG, EFVG order block are extremely relevant in intraday trading and weekly trend. So I like them. Here you can see that price rised, was rejected, but this EFVG, but this order block was stronger, the buying pressure was stronger, so price ride it again. So what we're aiming is to cancel or invert this inversion. So this was on Thursday. Friday we closed bullish. So what I was expecting on Saturday is the price to continue up. As you can see, Friday candle, we took previous day high and we closed above. So I was expecting a bullish day on Saturday. We're expecting to take the first thing to take previous day high. Whether or not we will close above or below will depend on the selling pressure. But I was pretty sure we are going to take this level here. So we can put the gun box. I was expecting to take this level here. So what I was expecting on Saturday, I was expecting for price to go to have pullback and to rally up. So this is the tool I use in my daily, in my reading of the daily. A chart, previous day high and low, previous week high and low, previous month high and low, daily FVGs, EFVGs, daily order block, and I like candlestick pattern to see whether previous candle took previous day high or low, or whether it closed above or below. In this case, it was classic, so I was expecting a bullish day to test whether or not we'll invert this inversion. So we finish with the daily, so daily bias is bullish. We go to the hourly candle. So we're gonna get back. So it was enough. Now we're gonna get back in time. There's something I was gonna have to consider. Yeah. Finish with this one. This is the daily chart. We go back to the hourly chart and we increase. We get back. No, start new. So we stopped at Friday. This is the daily chart. So if on the weekly chart I like to mention previous day high and low, in the hourly chart I like three things. I like to mention previous day high and low. So this is not accurate because something is really there. Yeah, this is Friday. This is the beginning of Saturday. On the hourly chart, I like previous day high and low. I like VGs, EFVGs, more for entry than for bias. And like EMA, I found that EMA for intraday trading is quite relevant for the direction of the trend. You can see here that price was trending. This is the 20, 50, 100, and 150. You can change as you want. You can make, for example, this is 50, 100, 150, 200. The idea is to put a fast EMA, average EMA, slow EMA for the trend. You can see that here on the hourly chart between Wednesday and Thursday, price crossed all EMA and started trending above all the EMA, above the fast EMA and the slow EMA as well, which means we had a bullish trend. What I want to see also on the hourly chart, along with previous day high, low, FVG, EMA, I like to see the market structure. As you can see here, we have clear break of structure, market structure shift here. So you can see here that price crossed this level and retest above it. So this we have here our break of structure, market structure shift. So I like to see the market structure, break of structure, market structure shift, and change of character. and I like to see the trend as well. So for example, here price is making clear bullish trend with higher highs and higher lows. So the trend is bullish. So we have bullish bias on the daily, we have bullish bias on the H1. I want to see a synchronization between these three time frame. So I am bullish on the daily, I am bullish on the H1. I want to see a bullish entry on the lower time frame 515. Another thing I like to do on the hourly chart is to set the order blocks. For example, as you can see here, we have a very beautiful order block. For to get a relevant order block, it has condition. First, it has to be on a solid time frame. H1 for intraday is a solid time frame, not 5 or 15-minute order block. It has to make bursts of movement. You can see here the three consecutive bearish candle. And the third condition, which is one of the most important, we don't take Asian on London or order block. The solid order block is an order block made during US session. As you can see here, this is GMT time 14. So this is from 14 to 15 hours GMT time, which is the US Open. So the three condition of the order block, the third condition is it has to be a solid time frame, like H1 on daily chart. The second, it has to has momentum. The first one is most important. It has to be in New York order block, and we take new data, previous day or at most 2 or 3 prior days. We don't take all data. So we're gonna use this order block for our entry, and we're gonna go down to lower time frame for our entry. As you can see here, I'm on the 5-minute time frame, and we're gonna get back. So I'm gonna stop this. We're gonna start new. Yeah. So no, this is Saturday. We're gonna go back again. Yeah, Friday, and this is Saturday. Friday and Saturday. So yeah, Friday ends here. So this is Friday GMT. It's already Saturday on the Asian session. So the week ends here. Friday, the week ends here. The American session ends here. So this is a new session. As you can see, we start the session with a breaker. So the moment we broke this order block, I was sure we are going to take this previous day high. I was pretty sure because we have bullish bias on daily, bullish bias on the H1, and we were just looking for a bullish entry on the 5 minutes. And you can see here that we had a breaker and price added to his breaker. And to be honest, I was asleep here in this part. So as you can see that price here make a retest on the breaker. Yeah. So my entry was here. So price reaching that high with our bias on daily and hourly. Uh,